Our next panelists are doing a really impressive things to expand opportunities for people who normally wouldn't be investors, and they're really breaking open the New Zealand markets in ways that should inspire other markets. They're doing a lot to help investors become more educated and sophisticated, which is a responsible way to usher in more democratization. So I'm excited to introduce the next panel, who will be talking about they'll make it sexy and fun, disintermediating the capital markets. Our three esteemed panelists all hail from New Zealand today and are here to share their disruptive opportunities and insights that you might not have considered before. And what I love about this panel is that you all share the same mission that Link2 has, which is to democratize access to investing. And their disruption spans venture, private equity investing, and public equities investing. So I'll give a quick intro to each of them, but then let them tell you more about what they're doing in more detail. Mark Bregman is the founding general partner of Quidnet Ventures, a New Zealand venture fund focused on exceptional founding teams building impactful companies. In 2020, he was selected as an Edmund Hillary Fellow. And throughout his career, he has worked with innovators and early stage companies. He's also held the chief technology role with global tech firms, including NetApp, Newstar, Symantec, and Veritas. That's impressive. And various senior management roles with IBM, as well as leadership positions in startups. Mark holds a PhD, an MA, and a Master in Philosophy in Physics from Columbia University, and an AB in Physics from Harvard College. We also have Colin Magee joining us. Colin is the founder and CEO of Catalist and has around 25 years of experience in financial services. Prior to founding Catalist, Colin worked as the head of conduct at the Financial Markets Authority and led the teams responsible for, this is impressive, regulating stock markets, broker conduct, equity crowdfunding, peer-to-peer lending, licensed auditors, and registered audit firms. He's originally from the UK and was general counsel of a London-based investment bank before moving to New Zealand 10 years ago. He has a law degree from the University of Oxford and a Master of Science in Finance and Law from the University of London. Also joining us today is Brooke Roberts. It's great to see another woman on the panel. Brooke is the co-founder, director, and co-CEO of Sharesies. Sharesies is a wealth development platform with over 500,000 investors who've collectively invested over $2 billion. At Sharesies, their vision is to give someone with $5 the same investment opportunities as someone with 5 million. I think that's so cool. And Brooke was the co-winner of the 2020 Women of Influence Business Award alongside her co-founder, Sonia Williams. And she's also was awarded the 2022 New Zealand High Tech Inspiring Individual. Okay, so I'd like to hear more from each of you about what you're actually doing now to disrupt and disintermediate the capital markets.
Well, let me thank you, Shelley. Let me start. First of all, as those of you listening can tell from my accent, I'm actually not a Kiwi. I'm a US person, but I spend a lot of time in New Zealand. I've been going there for longer than most of the Gen Zs. In fact, longer than all of the Gen Zs have been alive since I started going there in the 1990s on a regular basis. I guess this is the anti-Gen Z panel because my children are not Gen Zs. I'll just put it that way, and they're not babies. So I started a fund in New Zealand because I saw a massive amount of innovation starting to really come into the economy there. I really do believe that New Zealand is following the trend that we saw in Israel in the 1990s when it broke out as a startup nation, and in the Nordic countries probably around 2000. And I was very involved in Israel prior to 1990 and in the Nordics around 2000. So I saw that firsthand. As I mentioned, I've been going to New Zealand for a long time, and so I've built quite a bit of a network, and that's what drew me to go down there and launch a fund. Ironically, my fund mostly invests in deep tech, so we actually don't invest very much in fintech, which is the topic of this conversation. But in some sense, within the venture marketplace, the venture investment world, we're disrupting. We, myself, and the other VCs in New Zealand are building a new model and disrupting venture. And working with Colin, one of our peer firms, has actually opened up on a mechanism to allow individual investors with small investments to invest in funds, which have historically been limited to qualified investors that would be called wholesale investors in New Zealand or accredited investors in the US. And so Colin's developing a new approach that democratizes access to capital through markets for small businesses. And Brooke, with the launch of Sharesies, is sort of on the other side of that, providing access to investors into the markets. So let me turn it over to Colin, and he can make a quick introduction.
Thanks very much, Mark. Yeah, kia ora, everyone. It's great to be here today. So my background is I was originally a lawyer in the UK. Not originally a Kiwi either, but been here 10 years, and my wife's a Kiwi, so I feel very much as a Kiwi now. When I came over first, I joined the regulator here, the Financial Markets Authority, and in that role, it's where I got a lot of interaction with the businesses in New Zealand. We're a small country at the bottom of the world. 97% of the businesses here are what we call SMEs, small, medium-sized enterprises. And those businesses really struggled, not necessarily at the startup stage, but when they were looking to grow. So in my role at FMA, I would hear a lot about the access to capital for those businesses. The regulation that was in place prevented them accessing most investors in New Zealand. So what we were doing is we said, actually, markets are the way that we can put together businesses and the investors, but markets didn't traditionally work for smaller businesses. So what we've done is we've put in place a stock market. We've got the same stock market license as the main stock exchange here in New Zealand. We have protections for investors, but we do periodic trading so that anyone can invest in businesses as small as in value a few million New Zealand dollars of market capitalization. So we're really changing the size of business that can become effectively a public company. And as Mark says, we're giving access to things like venture capital funds to people who have as little as $1,000 to invest in those funds.
Great. And what about you, Brooke? Can you tell us about what you're doing?
Yeah, kia ora koutou, ko Brooke tōku ingoa, ke te mihi o ke te mana whenua o tēnei rohi I tūnei au. I just want to acknowledge the mana whenua, so it's the people of the land that I'm on here today in Te Whanganui o Tara, Wellington. Yeah, it's great to be here. Thanks for having me. A little bit about Sharesies. Yeah, that is a bit of a big headline for for what this chat's about, for essentially, yeah, how can we provide more and more people access to opportunities that they've been left out of. When we started Sharesies in 2017, only about 20 to 30% of people based in Aotearoa, New Zealand and Australia own shares, and the majority of that was likely to be through their superannuation, so their KiwiSaver, which is, I guess, equivalent to your 401k in the States, equivalent-ish. And so there was just really no that in New Zealand and Australia, investing really equaled home ownership. So most people were like, okay, cool. So the way that I'm going to develop wealth is going to try and get on this property ladder, buy a home, and then I'm set. And there was not much real information or understanding about how to develop wealth in other ways. And in the markets we've been in, home ownership's been really hard to attain. And even now, even though prices might be dropping, it's still really hard to meet the serviceability or be able to get the loans you need to be able to get a home. So it's quite a tricky spot for people here in Aotearoa in Australia. So we essentially we really wanted to find a way for everybody to be able to develop wealth, and like Shelley said, give someone with $5 and $5 million the same money opportunities. So we kicked off in 2017 offering access to six funds, and then it's they're exchange traded funds, and then it's grown from that to over 8,000 investment options from and where people can invest in the New Zealand listed companies, Australian listed companies, and US listed companies and funds too. And that has, yeah, that's what's quite different about us, is we're the first to actually make sure that there is no minimum, so move that pricing barrier, which was leaving a lot of people out, for feeling like, oh, to be an investor, you have to have, you know, millions of dollars or something. We also work on that jargon barrier and make sure people can feel like we just use everyday language and feel confident and motivated to be building their wealth and learning as they go. And then essentially we've got eliminate as much as we can that barrier of feeling left out. people feel like, oh, it's only something for the wealthy few, and that's something that we've been able to do, and we've been able to get more women participating in investing, and more communities being able to participate in developing wealth. And right now, 8 minutes ago, we just launched our KiwiSaver product, so that's exciting. We just let people in Aotearoa know that, and that's a big game changer for our company too, in terms of how are we supporting people as they save for their or invest for their retirement. And it's quite a cool scheme we've got here in Aotearoa, so it's cool to be able to support that.
Well, thank you. I was so impressed with the kind of educational just information that Sharesies puts out. It's really bringing in, opening the umbrella wide to everybody, and it's just empowering feels like a whole country. So I'd love to know from all of you, like, are there regulatory challenges you've had? Is the government there supportive of opening these efforts up? I saw that you went on a trip with Jacinda to Australia, and she seems to be such a great supporter of innovators. So yeah, I just love to know about your maybe challenges and journeys to get here, regulatorily, and in the midst of what's happening in our markets. Do you see any challenges with regulations changing going forward? For all of you.
It's definitely a challenge, and I'd love to hear Colin's perspective too, from actually being inside, and he mentioned a few before too. But from our perspective, I think no matter what it's been, COVID has slowed down a lot of things, and that's been quite tricky. So it has taken us a while to get to our KiwiSaver license, but also with all the regulators we work with, because we also work with regulators in Australia, we're often innovating. So we are looking for exemptions, or we're looking at, doing things quite different, which does mean you need to make sure that the regulator really understands that, we don't do things status quo. So it's not an easy tick box sometimes. And so there's a real strong desire, I think, for people and the regulators to see change in this space and make sure that things are more accessible. But when you make things more accessible too, also making sure that there's strong communication and rules and understanding around that. And so that's something that we have to always make sure that it's what we care about too. So there's a real strong alignment there. But I think, I guess really good innovative things can take time in financial services, and mostly that's a good thing, but sometimes it would be good if it was a bit quicker, I guess. But I would say ultimately there is a lot of support, but as Colin will probably speak to, there are a few there's some legislation that is quite prohibitive for people to be able to get access to opportunities, especially for, more high risk opportunities like investing in startups. But that's kind of been based on previous, expectations that if you're investing in startups, and you'd have to be investing hundreds of thousands or thousands, and that's not the case anymore. So there is a real opportunity to do a lot of re-education and look at some of the legislation we've got to provide more access, while also making sure people have the confidence to know what they're doing. But I would pass to you, Colin, because I feel like you'll have more insights, having been at the Financial Markets Authority.
I think I'd echo some of what Brooke said. Having been at the regulator in New Zealand, there's definitely, it needs to be forward-looking. We're a small country, we need to be innovative. And I think actually we do a pretty good job of being innovative. But being a small country, the regulator, and that total, I couldn't tell you the number now. When I was there, it was about 150 people total within the regulator. That's regulating absolutely everything in the financial markets. I mean, it doesn't include the Reserve Bank, but everything to do with conduct in the country, financial markets, which is pretty tiny when you're looking at huge innovation. So we had to get 4 pieces of secondary legislation passed in order to get our business up and running. Part of that was to do with the fact that we are wanting to give investors the same level of protection as if they're investing in a traditional stock market. Obviously, a traditional stock market, you have those continuous disclosure obligations that are just going to be completely inappropriate for the sort of size businesses we're talking about. So we've pulled that back to being periodic point-in-time trading, and therefore we have periodic point-in-time disclosures. Now, that obviously has to go through a completely different mechanism of getting our own regulations in place. That took, well, partly it was because of COVID, but it did take a couple of years to get those in place. But it's just something I wouldn't have even tried to do if I was trying to set up this business in the UK. The the government and the regulator are open to looking at what it is we can do to change the existing law to facilitate things which are actually going to be positive for the whole capital markets. So that's what I'd really say. It's never as quick as we'd like it, but things can be changed, laws can be changed in order to facilitate something that's actually going to be good for investors and good for businesses and good for the whole economy. So yeah, that's probably the main takeaway I'd have on the issue. Mark?
No, I would add something as somewhat of an outsider, having come into New Zealand to run business. I've been operating or involved there for 30 years, so it's not like I'm brand new. But the thing that I observe is that, first of all, regulation in general is there to cover the human side of these systems, not the technical side. And so a lot of the debate, someone on the earlier panel talked about being I think I would say a crypto skeptic. I'm probably more skeptical than a skeptic. And part of the reason is that I hear a lot of arguments that technology will solve the problems that regulation is intended to. And I don't think that's right, because I think regulation is about the people side, not the technology side. And that's understood, I think, in New Zealand. It's also understood that because it's a small place and because of its history, that government has an important role to play, not as an adversary, but as a framework for making the markets, and I'm talking here broadly, not just the financial markets, all the markets, and making the life there operate well, operate smoothly. And so being a small place with that philosophy, not only in financial markets, but in many other areas, it's possible to go and meet with the regulators. Good examples, New Zealand has become an aerospace kind of superpower. For its size, definitely superpower. It's ranked number 4 in aerospace innovation globally among nations. And yet it's a country that's half the size of the San Francisco Bay Area. And the reason is because early on, with some early innovation, the regulators realized, and the individuals working on it realized, that there needed to be a collaborative effort to open up regulation to make it easier to experiment and take some risk in a managed way. And that's really caused that to explode. I think Colin's experience himself in setting up Catalist, or Brooke's in terms of what they've done with Sharesies, would have been much more difficult almost anywhere else in the world, because in many places, and particularly in the US, we have set up a system in which the regulators are adversarial to those who they regulate. And the government is viewed as the less control it has, the better, which is not always the case. Sometimes it's important to have those guardrails. I mean, Colin's point of being able to provide confidence to investors that even though they're coming into something that's brand new, Catalist is a couple of years old at the most. It's a new type of market. It's a different kind of investing, but they know that there are guardrails. Similarly for Brooke, when people come in and want to invest their $100 or $1,000 in a completely new kind of a market, they're confident in New Zealand that there is a regulatory framework which has provided some guardrails, and it's not the Wild West. Actually, you guys should comment on this probably more than me, but the people I've been talking to have not been freaking out as much as people in the US at what's happened with the collapse of FTX. The reason is, that couldn't happen in New Zealand because the regulators would never have allowed that to get to that scale and that lack of oversight. And so I think that is a good side of regulation in New Zealand. And finally, the other thing is New Zealand is globally recognized as one of the easiest countries to do business, most transparent, least corrupt. That makes it actually quite easy to operate in all businesses in New Zealand. And the irony I find is the New Zealanders are always complaining about the overhead and the complexity and the bureaucracy. They have no idea compared to the US.
Wow, that's great. Well, so actually, the more I've learned about what you all are doing in New Zealand, my mind's been blown. I had no idea that there was this kind of innovation. And I definitely want to hear you, Colin, describe more about how your exchange works on a periodic basis, because I this isn't my world, so maybe there's other people doing it, but I thought it was one of the most unique things I've heard. But before you answer that, and there's so much, and what I've learned from you, Mark, is there's so much innovation coming out of New Zealand, and it's such a small populated island, so far removed. What do innovation is a mindset, and it's often a cultural one. So has it always been thus in New Zealand? Have they always been these innovative people and we just didn't know, or has something happened? What's influenced this? And I mean, I know you mentioned, Mark, that you've seen several unicorns come out of your investments down there. And I think these markets, maybe all our listeners need to know way more about this. There's a lot going down there.
I wish they were the unicorns that have come out of New Zealand were my investments. Unfortunately, they were prior to my starting the fund. But it is true that we're seeing that happen. The thing I would say is I think New Zealand has been an innovative nation for a very long time. What has been its challenge has been getting off the island. There are an enormous number of innovations. How many of you have ever seen a hypodermic syringe with a removable needle? Probably everybody. If you've ever had an injection with a disposable needle, New Zealand invention. Didn't get commercialized by New Zealanders, but they invented it. And then they cut a deal, which was probably not the right one economically, and that became a global standard. Anyone who's using any semiconductors, those were built in rooms that use HEPA filters, high efficiency filters that are designed for clean rooms, developed in Auckland. Again, not commercialized by New Zealanders. So what we're trying to do in the current stage of the economic evolution is bring the process of commercialization and innovation to what's long been a tremendous process of invention within New Zealand. That's my perspective. I don't know if Brooke or Colin, I mean,
right.
we have a good mix here because Colin comes from the UK, and which is closely related to New Zealand, but has been there a long time. And Brooke is the only authentic Kiwi.
Right. So I love all three of your perspective. What do you think about that? Brooke is the insider.
Sorry, I just had a pop-up come up and I was like, oh. So what I think of it as an insider in terms of the innovation in our mindset here.
Mm-hmm.
Yeah, I started thinking about, there's a saying in New Zealand about like a number 8 wire, and it's real old school, but there's this like philosophy, I guess, because we have traditionally been a bit more isolated, definitely not these days, but that Kiwi ingenuity has kind of come from this, and it's like a farming analogy about how we sometimes, and there's this quote from Ernest Rutherford, we don't have money, so we had to think. And I think that there's this real innate Kiwi culture around ingenuity and giving it a go and thinking quite laterally about problem solving and connecting different dots. And I think that definitely is ingrained in our culture. And then we also, we are quite a diverse multicultural space too. So there's heaps of insights and innovation we get from connecting, collaborating with people with different backgrounds and communities too. So from different communities. So I feel like that is a big part of what drives us. And we definitely always punch above our weight, whether it be in sports or business or anything we do, no matter, like, we're a country of 5 million, but sheesh, we like take on the world stage a lot. And I think that that's in our culture.
That's cool. And what about you, Colin? From the UK, what did you think?
Yeah, having been here 10 years, it's the culture is definitely what a can-do attitude, but it's can-do with the small amount of resources that we have, do the best with those resources. So as Brooke says, they call it number 8 wire, mending something with just a piece of wire, and it'll do, rather than going out and getting the expensive replacement. Some of that is sort of the pioneer attitude, but New Zealand is, I feel, it's really changing, and whilst the culture is really embracing the Indigenous Māori culture as well now. So it's not just a sort of pioneer colonial attitude that we can be innovative. Actually, I think people in New Zealand are seeing that the Indigenous Māori culture here has really something to add to the innovation and the worldviews of that Indigenous population as well are adding to the founders and the businesses that are coming out of New Zealand. So yeah, it's a really diverse range of businesses and coming out of a diverse culture here.
Yeah, that makes sense. So I did ask you earlier.
I wanted to add one other thing to that. I think, and I think both Colin and Brooke commented on it. There's a term in Maori, in Te Reo Maori, in the language, which is matarangi, which is the Maori science or knowledge. And people in the last, I don't know, probably 10 years, but certainly in the last 5 years have really, in New Zealand, taken that to heart. There's a lot of Indigenous knowledge. And then many of the companies that we're seeing, that we're starting to fund, are built on taking that Maori knowledge and basic understanding, whether it be plants, materials, whatever, and translating it into solutions for the modern world, and doing that in a way that benefits the Maori iwi, the tribes that have owned that or kept that and developed that. And so I think that's a really unique aspect. I think the other thing is that, and Colin touched on this, New Zealand has grown up, and I think Brooke did too, as an island, as a small country in a world. People starting companies there grow up with scarcity. There's a very small amount of capital. There's only few people that you can hire. There are very few customers, and that makes them extremely efficient and very focused. The biggest challenge, and this is where we're trying to now help the entrepreneurs get off the island, so to speak, is being able to open up their mind to a growth mentality when they move into a market like the US, which is hyperabundance. I mean, I challenge the founders of our portfolio company. I say, what would you do if you had 50 or $100 million? And they look at me like I'm an idiot, because that's impossible in New Zealand. But it isn't impossible in Silicon Valley if you have a good idea, as you know, and as we see the funding. One of the companies that I'm working with told me they've recently done a survey of their potential customers in the US, and they said there are 450,000 small business customers that they can target. And I jokingly said to them, I'll bet there aren't 450 of them in New Zealand. And they looked at me very seriously and they said, no, there are 72. We know them all. That's the difference in scale that is unbelievable for people coming from a large market like the US. You can't imagine starting in such a constrained economy, but that's why innovation like what Colin is doing and what Brooke is doing can take place there.
So how could you explain to the audience, maybe starting with you, Colin, how exactly, I know you talked about periodic trading and how that gives more time and ease for compliance, but maybe just walk us through a little bit of how you're enabling and democratizing investment in private equity there. And then I would love to know how, especially Mark and Colin, I'm imagining that both of your investors get to interact with each other, and perhaps maybe if all of you three are even, coordinating and complementing each other's work, are you in a coordinated way getting, your customers to go to each other and diversify their investing?
I can start with the second part of your question there, and I think it comes back to Mark's point that New Zealand being a small country, we have to help each other. So we have to point people in the right direction, and it's not about strict competition and trying to get customers solely to yourselves. So, for example, we're focused on smaller businesses, so businesses under 100 million in valuation in New Zealand dollars. So the sort of businesses you would never be able to invest in those as what we call retail investor, and everyday investor can't access those on a traditional stock market. If you're a small business on a traditional stock market, you don't get any broker coverage. The visibility of your business is low. It means there's not a lot of trading going through, and actually you end up with this downward cycle of liquidity where it's actually disincentivizes the first person to put the next order in to buy or sell, because no one quite knows what the fair price is, and effectively you lose out. You lose value by not putting the fair price in if you're the first person in. So everyone stands back and waits for someone else to go. So that's not great for the company. You end up with a downward spiral of liquidity, and you don't end up with the market doing what it's meant to do, which is facilitating buyers and sellers coming together, facilitating ability for the company to raise capital. It's not a unique problem. I mean, when stock exchanges moved to being online, as you know, the same issue happens every day in the morning when no one quite knows what the fair price is for a business when the market's open. And practically every single stock exchange around the world solves that by saying, when we open, we'll have a short auction. All the buyers and sellers come together and give their best prices, and then they all trade in one batch at the end of that auction. So in New Zealand, NZX, that's the first 6 minutes of the day. You have a trade in a single batch, so everyone gets the same price. To remove that disincentive for anyone to be the first person to put their order in, because they know if they go in at a too aggressive price, you still get the same price as everyone else. You can get a better price than you've put in as your best price, rather than being picked off. So we just have that same concept that if you're a small company, people aren't going to be putting in orders every day. A lot of the businesses we're looking at are trading perhaps once every quarter. Some are in our private markets, which are only available to wholesale investors. They're only trading once a year. But it means at those points of time, all the buyers and sellers can come together. They can put in their best prices with the knowledge that actually if they put in a price that's too aggressive, they get a better price than that. So it clears at a single price. On the businesses side, though, because they're only having those periodic engagement with their investors, it also means you don't get that sudden, someone is going to trade 100 shares in your business, it's going to move the price down, and you get 20 odd calls from shareholders saying, what's happened to the business? The price has fallen today. And actually, it's got nothing to do with what the business is doing. It's just because someone's decided to sell a few shares. So it actually ends up being better for the investor because they get overall better liquidity. They know that they can come and buy and sell, or more likely to be able to at those points of time, trading at a fairer price because everyone's getting that same price, but also much better for the business because it can have that good engagement with investors at those points of time, quarterly or monthly, however frequently they say they're going to be trading. But then between those times, the business can get on and run the business, which is what small businesses need to do. A lot of these businesses don't have large staff. You might only have some of the businesses listed on ours, less than 10 staff. So they're not able to be engaging with investors every day. They want to be able to have good engagement with investors at those points of time and then get on and run the business for the benefit of everyone between times.
I think it's such a great model.
Let me add something, because Colin didn't really address this, but while his exchange handles small businesses, at least one of those small businesses is a fellow fund, like my fund. And ordinarily funds, especially a closed-end fund like mine, collect capital, make capital calls, and then close for any additional investment. So it means there's a lot of illiquidity for investors. What Colin has, together with the other fund, figured out is they can create a separate entity in which the investors can invest, and that entity becomes a part of the closed capital pool, but individual investors in that entity can trade in and out of it. So one of the challenges for private equity investors historically has been, you know, if you're a small investor and somebody says, hey, would you like to invest in this? Give me your money, and in 10 years, I'll give it back. They go, what if I need to buy a new house? Well, sorry, the money's locked up. So that model changes the dynamic quite dramatically, which also then we need to go back, obviously, over time to the regulators to get them to understand what that means, because it changes their historical perspective on closed-end private equity funds.
No, I'm wondering if any other markets are doing anything like this, and if you think these models could be exported to other things. Now, Karim's here. Does this mean we're running out of time? I can hear you.
He's
Yes,
muted.
you are.
Oh, I'm running out of time. Okay. Well, then I'll hand it over to you, Karim.
Mark, Colin, Brooke, thank you so much for the insights. We loved it. I think we're cousins in what Link2 is doing and what Colin and Brooke, what you're building. And cousins should work together, or at least have a meal or so, share a vacation. And let's explore if there are opportunities between our companies to work together. As I said earlier on the Global Investor Conference, the reason for this conference is so that we can identify partners, players, competitors, and different business models that either function together or to be aware of. So thank you so much for doing that.